Hi, Peter. Thank you so much for inviting me to your office. It's really nice and beautiful place.
Thank you.
Okay, so let's get started. We all know that the Federal Reserve announced to keep the rates steady for the third time. And Chairman Powell said that he won't be rushed into cutting rates until the more clarity on trade policy. So what message do you think this wait-and-see cautious stance sent to the market?
Yeah, I think he's, being consistent. I mean, that's been his thinking all along. And so I think he's right because we need more clarity in terms of trade and how it's going to unfold. And of course, the big question is, will inflation pop up and be a problem? I think he's doing the right thing and taking a wait and see approach.
Mm-hmm. And also, the latest statement from the Federal Reserve emphasized that both inflation and employment risks have been increased.
Yes, in fact, he talked about stagflation.
Yes,
a subject that he hasn't talked for in many, many years, and so I guess that's the key here. Now, it's true that inflation has been going down; it's going in the right direction. But it is also true that we have sticky inflation, and a lot of prices have come down, but not to the levels that would suggest that the consumer is going to have more disposable income. You need to be vigilant, and I think the bond market is applauding Fed Chief Powell.
Mm-hmm. So, do you start to see any early signs of stagflation?
There are some signs. For now, I would say it's sporadic, but there are some signs. Yes, for instance, crude oil prices have come down a lot, and gasoline prices have come down, but they haven't really come down at the pump that very much. And so, you're still paying over $3 a gallon on an average. And that's not really any big relief. I mean, of course, it's a big relief from 4.5, but at 3, it's been consistent now for, I'd say, almost 8 to 9 months.
Yeah, so as we're talking right now this morning, the biggest news is that the UK and the United States have reached some kind of agreements on the trade tariff, right?
Yeah.
So how do you think that would impact
Well, that's
the
good
market?
news. When it's announced, it'll be the first trade agreement.
Yeah.
And of
Between
course,
United
it's not.
States and other countries.
Yeah, of course. There's it's a long road ahead of us, and I think the markets will welcome this. At least we're seeing some breakthrough in terms of trade agreements. It's just the beginning. We have a long way to go, but I think it's good news, and I think the markets are liking the fact that we're going to get a trade agreement, especially with the United Kingdom. Of course, the key countries remain China, Canada, India, Japan.
Yes, so how many rate cuts do you think there will be in 2025? Does that change from the beginning of this year?
Yeah, I think the market is pricing in 3 or 4. I'm only pricing in 1 or 2. And I think that the June meeting is not likely to produce a rate cut.
Okay.
Unless things change drastically over the next few weeks.
So that would happen in later half of this year?
Yeah, I think we're looking more maybe September.
Yeah, and at the same time, U.S. President Donald Trump has been pressuring on Powell to cut rates. Do you think, he's still going to adopt this wait-and-see policy?
Well, look, I think he's just, I just think that's his rhetoric and the way he acts. Whether or not that's going to force Powell, I don't think so. In fact, I think it probably does more harm than good, in the sense that, the Federal Reserve is independent and they'll just take their time. So the more they're pestered about the situation, I think the more time they'll take, unless there's a good reason for them to cut immediately.
No, right now the economic data doesn't suggest so, right?
Well, right now the data is inconsistent,
Right.
And so you have good news, you have bad news, and you have no real clear picture of where the economy is headed. Although I think there's a good possibility that we might be in a light recession presently.
Already?
Yeah, it's very possible.
Light recession. Like, can you elaborate on this?
And all of this is because of the uncertainties. And so you see that with the manufacturing and service PMIs, where they've been going down. Obviously, nobody's stepping up to the plate. Nobody's going to increase capital spending, CAPEX, etc. So, and that's an early warning sign. And in the first quarter, we saw negative growth, and I suspect that that's going to happen in the second quarter, which is this quarter.
So do you think the trend of a light recession would develop into a more
serious I don't think it's going to be serious. I don't think it's going to be long-lasting. I think you'll get out of it, very quickly.
And what would be the trigger to help the United States get out of this light recession?
Less uncertainties over the trade. And the Fed pulling the trigger. Although I think it's too late for the Fed to stop a recession.
And besides this week's biggest news, the Federal Reserve's monetary policy, as well as the tariffs, are there any other trends do you think investors should be really watching right now?
Well, I think you have to look at class assets such as yields and the dollar, and also what happens with the price of gold.
Yeah. Price of gold has been fluctuating since the beginning of this year.
Indeed it has, yes.
Yes. So do you think it's going to continue? This is like short-term bonds or the beginning of a renewed uptrend in hard assets? What's your view on gold?
I think for now we're going to see stabilized yields, trading within maybe a 15 basis points rate range from the high to the lower end. Gold, I think it has a way to go on the upside. And the dollar, I think for now we see some stabilization.
Yes, because dollar index has been trading lower recently. Given
No,
the
it has, but it's basically now firming up around the par level, the 100 level. And I think that's more or less where we're going to see trading over the next couple of months.
And at the same time, even though right now people are paying less attention to earnings, but actually we're in the middle of earnings season, right?
Yeah, we're at the peak of the earnings season. And so far, most companies have beat market expectations. Of course, the missing link is guidance, and that's because of uncertainty. So we just have to wait and see on how the second quarter earnings shape up to be.